Stock started the day. Obviously, by the time the market even opened, it wasn't doing too hot. And then we kind of got up and down, but continued some of the selling and extended it in the regular trading session. But by the end of the day, we actually recovered all of the regular session's losses. And then by the after hours here, we started to fill in the pre-markets selling. That gap from the pre-market. So not so bad. And I expect that will probably continue to be the case tomorrow. I'll break that down in terms of like, okay, was this like a big bearish flush and now we're done? Or, is the bounce back going to be a reversal or not? And so we'll take a look at different indicators and see kind of what we expect tomorrow, and then going into, sorry about that, but tomorrow going into the rest of this holiday week, and then into next week, which is a really light normal week, and then finally into the new year. So are we kind of in a bearish mode, or was today the end of that bearish mode? And then we'll take a look at our trade idea for the day on a stock that's been in a pretty steady decline too. We're going to talk about how bearish that decline actually is, and then what kind of trade we can do with that. Really popular stock, one of the most popular stocks. So let's go ahead and get started. Today is Monday, December the 20th, 2021. This is the market outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 here with the market forecast indicator. The intermediate line has fallen out of the upper reversal zone again. Remember, this time it did not, out of bullish territory, excuse me. This time the intermediate line did not get in the upper reversal zone. Like last time, it was easily in the upper reversal zone for a good period of time. This time, not so much. Very short-term trend, didn't get very bullish. You did get a very strong near-term rally right at the start, but then that ended it, right? We never really kept going. The next near-term peak didn't get in the upper reversal zone, and we're back to bearish territory again. So bearish posture. The market sentiment line is actually still rising, and it's above 80, so it's in the upper reversal zone. You still got a decently strong bullish trend. You are nearly 2% below. You were well below that at the lows of the day today. We came off of the lows and closed right at that 38% retracement of this bullish rally that we've been on. So a really good end of the day that could have been a lot worse. Same thing on your Dow Jones. Now your Dow Jones has got the red line. You are 2% below. You've got light pink shading because you're just out below 60. The market sentiment line here is not above 80, and it's actually falling. And your short-term sentiment, same thing. The peak didn't get very bullish. We tried to get above the 23% line. It didn't work. We came right back down, and we're back to the nearly the 62% level. Look at the Nasdaq 100. This one's been worse. Wasn't as bad today. A little bit of a shooting star type candlestick pattern, or kind of a doji spinning top, but on the bottom, kind of a pattern there. Dark pink shading and a red line for the Nasdaq. See the S&P and the Dow, remember its intermediate line got up to almost 80 before rolling over. This time it didn't, right? This time it's really down. It's down further than the last time. We never really did get dark pink shading and a red line in the Nasdaq the first go around. Well, we are now. We're easily below 38% retracement level after this engulfing pattern yesterday. Oh, here's where we're at. Sorry, after this engulfing pattern on Thursday and then the follow through on Friday. Here's where we're at, easily below the 38% level. 3.25% below the 30-day moving average. And then finally your Russell 2000, again, long lower shadow, so good day today from that perspective. Those tend to be pretty bullish. There's a low point set, but look at right where we hit that low point. We hit the low today on the Russell right at that 23% retracement. That's so dang significant. And you see we've hit it multiple times on an intraday basis, right? Not quite over here, but again right there. Over here we hit it on an intraday basis. And here's the next time we've hit it on an intraday basis and didn't close. So, but remember, we just barely had a breakout to the upside that ended up being a fake out. And now we easily have dark pink shading again and a red line. And you can see the near-term line is still not getting into the upper territory, bullish territory there. And your posture is strongly bearish, 6% below the moving average, falling. In fact, when you look at the weekly, you can see we are in bearish territory. That's market sentiment decline when your intermediate line gets in bearish territory. You can see the last time it did that, at least especially by this much, was the COVID drop, and you can also see the late quarter 2018 drop. We got down into bearish territory. For the S&P 500, the intermediate line's just barely breaking below 80, and that's what you need for an intermediate decline, right? And shoot, we didn't even get that here. You came close. and we came close over there. So the two actual intermediate declines that we got, it didn't break below 80. It came close, but it didn't. So it goes to show just how bullish we have been on the Nasdaq. The near-term line did drop into bearish levels, both those instances, down to the reversal zone there, down to the reversal zone there. So at least we did get that, and we are getting that again. So we got again this really bearish near-term peak on the weekly chart from a couple weeks ago, and then now we're starting. Obviously we're back down, and the intermediate line is falling below 80 for the first time since it crossed up above 80 this go around. Here's your Nasdaq 100's weekly chart. Same thing. It's dropped below 80. Its near-term line is getting bearish, and we're getting a lot closer to that 30-week moving average down here. Of course, the week's not over with. We have a few more holiday days left in this. Let's take a look at the other weekly chart that we look at all the time. That's your Hakinashi candles. We have a red line, we have a negative differential, we have a falling PPO. That's the three things you look for on this chart for a intermediate decline. So we have that. Of course, you have that on the Nasdaq 100 as well. It's a little bit more bearish on the Nasdaq 100, and we have had it on the Russell for a while, and it's just continuing. In fact, we're almost to a bearish crossover on that 1040 week crossover, and again continuing with the negative differential there. Looking at the three green arrow charts for all the major indexes, light pink shading all across the board now. So three red arrows everywhere. Remember, we were looking for 1 day and then to bounce back up, and obviously we didn't get that, right? So we didn't tank today like a lot of people. I mean, for a lot of investors, it's either we have the COVID drop or we rally 100%, right? And so it's a really, really black and white. It's about the blackest of black and the whitest of white markets. But obviously that's not the case. So, we weren't looking for, it doesn't matter that we didn't fall off a cliff today, but what we didn't get today was a bounce off of Friday's low point, because that's when we got, the fresh set of three red arrows that can be used as a buy signal, excuse me. The Qs have been 3 days now in this pattern. The Russell's been a lot of days in this pattern. We never did get the green shading. And then, you just barely got it today. Today's the first day with three red arrows. So, again, it doesn't look like we're bouncing up anytime soon. It looks like we're actually getting a bearish divergence again on a lot of these. So, SPY, we're down. The MACD is negative. We're well below the 17-day. It doesn't look like we're going to get above the 17-day anytime soon. It looks like we're just going to fill in some portion of this gap between the 50 and the 200-day moving averages. That's what the Qs look like for the first time. Like we're getting down here during this little drop. Again, bearish divergence going on right now. Small cap sector, we are again well below. Now we have the 30-day crossing below the 50. So that's that. We've had the long term, this golden cross, and we're looking for this golden death cross. Now that we're below the 200-day moving average for an extended period of time here. Well, before you get the long-term death cross, you get this intermediate-term death cross where the blue line crosses below, and we got that today. So we'll see how this plays out. We're still easily below the 8-day moving average and still diverging, right? Kind of diverging. We're just a little bit below the moving average there. So let's look at the directional movement index. You can see a jump up to almost 30 and below 20. So you got bearish breakout pattern on the DMI. For the S&P, not quite on the Qs. We're still just kind of flirting with 25, but obviously you got the dark pink shading and the red line. And then let's see here, you have IWM. We're still in bearish territory, so we're still above 25. We broke out above 30. We're still well below 20. So still, and the ADX is rising to strong levels, so we're still very strongly bearish on that. If you look at the SPY. We have, again, a noisy pattern. We started with a bearish pattern last week because of the gap and then the move off the lows today. The trend noise balance dropped to 0. And you have, and then we are in the cloud now, and your trend quality dropped to 0 too. So, again, relatively noisy because of the gap and then the move higher. We're actually higher than the open today. So, just when you look at just the day itself, it was actually a bullish day. The Qs are in the cloud. The green line is below the blue line. You're still noisy. We don't have an intermediate trend going there yet. IWM, you have a very mature bearish trend. We are well below the cloud. Price is well below where it was 26 days ago. We got a mature trend below -5, above 80, going on there. Finally, the Bollinger Bands. We are in the lowest quartile now, so that's a bearish quartile for the SPY. Intermediate decline level. Same thing with the Qs. We're really pushing on that lower band now. And IWM has been and continues to be, right? We're just pushing, and now we're flirting with, there we are right there, we're flirting with the low end of the value area for this calendar year. So that means 70% of this calendar year's volume is above us right now, including the one price where most of the volume is, well above us. So that means, and even you could say too, the 2-year, when you look at the 2-year level of volume, we've got a big chunk. That's why this 23% is so important, because getting below that, all the way down to the 50% retracement, there's not very much volume support down to that spot. Let's take a look at the intraday chart here. You can see the gap today, and we ran away at the open, but we came back and we came really close to filling in. We still haven't filled in any of today's gaps. We have now in the after hours, we're at 456, so we are up into right about here. So we have started to fill it in on the after hours trading. Same thing with the Qs, almost the exact same pattern. IWM looks a little different because we actually did start to fill it in at the end of the day, and we are not as far up in the after hours as the S&P and the Qs are. But you'd expect that we'll fill in that gap, but that doesn't mean that we're bouncing. It just means that it's a common gap, and you probably could end up selling that gap fill by the time we get to it, because we'll get up to some resistance levels on all those indexes as we do. Today's volume and trading range, again, consider this a holiday week, and also consider the gap. So we closed at 459.87. The high was at 455.40, so about a $4.50 added on to this. So about 9 points of a trading range, almost 9 points at 6.5 is the average. And you can see the volume just over 100 million. So that means that, at 9 points, we're still really pushing up towards the 2% level, which is where we typically peak on the ATR when we're in intermediate declines. And I expect that this is actually a market sentiment decline. And you can see the volume continues to trend higher too. So it's the average right now is really high compared to where it's been, and we're above that. So these are bearish levels for volume and trading range, and for that matter, volatility. The volatility, you notice, after gapping up to the resistance level at 90%, we came right back down. We're again near the sweet spot for risk on moves, and we're at 23. So that, just to kind of show you, like, we were, just barely at 20.5 last time we were at this level, and over here we were just barely at 20, and over here when we were at the same level we were below 20. So volatility is really kind of slowly ramping up and getting a little bit more iffy, because again, we're at 23 and we still haven't even broken into bearish territory yet for volatility. Like, you get above 95, that's obviously getting above 100 kind of confirms the intermediate decline, and we're not anywhere close to that yet, and we're already at 23. Again, we got up to around 100 and we were at 27. If we get up to 100 right now, we're probably going to be in the mid 30s. So that kind of gives you some perspective on just how volatile things are right now. So it was a bearish start to the day. We don't trust overnight moves with very light volume, and that's what we got. Very extreme overnight moves with light volume. They held throughout the European session, but of course not necessarily. We extended a little bit in the U.S. session, but ultimately closed near the highs of the day today, which was at the open on a lot of these large cap indexes. I expect that we'll fill in today's gaps. I don't expect that those will be bullish moves. Like we're going to now start a bullish posture. I believe that they're just, they are just like, I've told you many times before that we'll get a green bar here that will probably fill in that gap before we continue the bearish move. This is my expectation going forward. It wasn't that bearish of a day. I don't think we'll get a bullish move to reverse it. I think we'll get a bullish move to fill it. We'll get a green bar, and then we'll get some more red bars and maintain the intermediate posture. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at that suggest why you're either a lot more bullish than I am or a lot more bearish than I am? All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. You like your video today and you want us to do another video again tomorrow. Quick way to give us feedback if you like our stuff. Also, comment on our video. What stood out to you? What questions or comments do you have about anything I talked about? Post those in the comment section below. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42. And join our Market Outlook Facebook group that we've created. If you're watching us here on our blog, check out some of these other things over here on the right. Click on this icon here. It takes you to our Market Outlook live page. This is where I do Monday, Wednesday, and Fridays to do a Market Outlook live video on this page. I review all the old Market Outlook trades that we've done in prior videos to see whether we should stay in them, get out of them. I also put on today's trade idea, that day's trade idea before the market closed. We didn't do one today because I was out and about today. I couldn't get home in time. But normally Monday, Wednesday, and Fridays when we do those at 3:30 Eastern on this page. You can also get to it by mousing over Market Outlook and clicking on Live Trade Review. If you come down here, you can see our upcoming classes we have. If you hit View More, that takes you to our calendar. You can see all of our upcoming classes as well as all of our recorded sessions. All the way back for 3 years, you can get them on this calendar here. So just go back to, back to 3 years. You can go to different years and different months. Come down here, click on this heart icon. It takes you to this tab. Hit that like button. Also, hit this thumbs up icon. It takes you to a new tab and hit that like button there. Again, the more you do that, it helps us get our content out to more of our followers because of how their algorithms work. The more engagements these posts have, which is like likes and shares and comments, and the more they push it out to people. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here. All right, now let's talk about what's driving the price action. You can see it was risk off at the beginning of the day. You had developed markets actually holding up very well, and in fact, by the end of the day, they were almost positive. But your gold, your dollar, your long-term bonds, interestingly enough, were all negative. I mean, they weren't as negative, but everything was down today relative to pretty much the dollar, right? And you can look at UUP here as a basket of currencies. If you look at the dollar as a basket of currency compared to a basket of currencies, the dollar was not very strong today. If you look here, let me go to December, and I kind of talked about that, why that was the case today in a tweet that I tweeted out this morning. So the dollar is the black line here is 0. So all these currencies actually outpaced the dollar. The dollar outperformed the pound, the yen, the Canadian dollar, and the New Zealand dollar, but not the Aussie and not the other European currencies, specifically the euro. So the euro is actually up against the dollar, even though the dollar was up against pretty much every other asset class that was out there. So currencies really ruling the day today with the biggest performance. All right, now let's look at the different asset classes on this kind of on this chart here, where we kind of look at. Let's put TNX down here as it's more of a risk off, and gold up here is more of a, there we go. So these kind of all kind of moving together. We'll put UUP here. So, some relatively bullish on these risk off asset classes up here at the top. I'm just going to save this really quickly so I don't have to rebuild that again. And then down here you can see yields, and this is the 10-year yield. So TLT is actually not the 10-year bond. It's the long-term bond. So this is not as impacted by Fed rate hike. As long as, it's more impacted by economic growth expectations. TNX is impacted more by Fed rate hike expectations. And you can see it's in dark pink shading. Commodities, dark pink shading, red line. Bitcoin continues to be dark pink shading, red line. Look at global stocks dropping as far as they did. With EFA still down. Even though, remember, they had a decent day today. EEM still way down. Silver, copper, really down here. When you look at the primary, the biggest markets that are out there, the economies that are out there, the ETFs that kind of track their equities. China's down, everything dark pink shading and red line, and you're finally starting to get there on SPY. So this is a global selling, and you can see India, China, Russia, China, Brazil, all kind of bigger losses than what you're seeing on these developed markets. So the developed markets really aren't really bouncing up above the moving averages either. So it's not like they're trend changing. I mean, we are in full blown bear market mode, global intermediate decline. I wouldn't say bear market, but global intermediate decline mode right now. Dark pink shading and a red line all across the board. And when you look at like TLT on this chart, you can see we're still kind of, it was a down day today, but it was still relatively bullish. Gold, still gold's been so sideways. It's been so sideways that all these moving averages have gone through the range of the past 2 days. That's how sideways we are. Like, we've seen that IWM in 1 day, so this isn't 1 day, but it's still 2. And we saw what happened. IWM, it broke out to the upside, and then with that fake out, produced the biggest downward move we've seen in a while over the past couple of years. And so now you expect gold is going to have some kind of similar breakout here. We tried, couldn't really hold it, and now we're back to very neutral. And considering the point of control is below us, and risk appetite is, it's been, relatively bearish here, that you would expect will break out of this to the upside. The dollar is also relatively strong. You can see not so much today on the dollar index, but keep in mind that the dollar index here is made up of about 60% of the euro, and 40% all the 5 other currencies that's in the index. If you look at the dollar versus the Canadian dollar, it was actually very strong, and this is the biggest exchange, right? The Canadian dollar, US dollar, that's the most exchange currency pair. So because of the biggest trading partners, and big breakout move today, broke out above these highs, these long upper shadows which act as a resistance. This high was 129.36, or at 129.38. This high was at 129.48, so we're not quite there at that one, but very, very bullish. In fact, I think we even got earlier today when I tweeted out about it, it had an overbought cluster. Yep, it still held the overbought cluster at the beginning of this intermediate trend. You can also see its trend strength indicators very strong. So you'd think, okay, well, the dollar was down, the dollar index was down, but because the dollar was strong against the Canadian dollar, that's why we're really bearish on like XLE. In fact, let's look at the sector 12 grid. That's why we're really bearish in a lot of these areas. XLF, XLI, XLB, XLE, because the dollar is actually very strong today. It just wasn't strong against the euro, but it was strong against other areas, specifically a lot of these commodity areas. And we're starting to get more broad selling. Remember, when we are in bearish intermediate mode, everything is dark pink shading in a red line. Now, even the safe haven currencies, which right now, or safe haven sectors, which right now are showing us dark green shading and green line, the reality is they will start to come down too, right, and join. And you're starting to see the cyclical areas, and they don't look like, I mean, we're so far below the moving average, they're not going to turn dark green shading and green line anytime soon. XLY and XLC look bearish. XLK is finally joining the party, and you'd expect that these will too, just to a lesser degree. They'll hold their values better, but they'll still show the same dark pink shading and red line as you would expect if we are actually indeed in intermediate pullback mode, which it appears to be the case here. All right, so let's take a look at our trade idea for today, and we'll take a look at Tesla. Tesla, you can see, has gotten it's been strongly bearish. It's well below its moving average. 30-week moving, almost 15% below its 30-day moving average. You have an oversold cluster. You have a strong bearish posture. It's way down there, well below the 10th percentile. Market sentiment lines, though, is still actually in bullish territory. So it's not even, it's below 80. It's falling, but it's not really like overblown, to say the least. If you look at the long-term Hakunashi crossover chart here, you can see obviously we have falling PPO, negative differential, red arrow. So we are in intermediate decline mode, but not really like breaking down hard, to say the least. If you take a look at its moving average chart, you can see we are filling in the gap between the 200-day and the 50-day moving average, because we are bearish. But you still, you don't have a bearish crossover. You're not below the 200. Your 30-day is not below the 50 yet. So we're not like, again, strongly bearish. The only reason why we're so strong, it feels so bearish, is because we were so bullish there. Like, we've essentially erased a parabolic move. And there's nothing, it just means that, like, if you look at where we are from here to here, we're still trending higher. We just erased a parabolic move, right? So when you look at, like, from this level to where we're at right now, that's still a pretty decent trend. It's a 90%, 91% annualized return. So 47% rally. So we just erased that, is all we've done in this bearish move. We've hardly turned bearish, but obviously we're not so parabolically bullish anymore either. When you look at its DMI, It is, you know, at bearish levels, we're above 25, but you can see we're not going parabolic here. We just erased that parabolic, a strong parabolic move to the upside. When you look at its RSI and its CCI patterns, here we go. We are just flirting with bearish territories, but nothing too significant there. When you look at its trend strength, we're obviously below the cloud and below the green and blue lines. We have an intermediate trend going, but nothing too crazy bearish. We're not below -5. We're not above 80 yet, and doesn't look like we'll get strongly there. The Bollinger Bands, we are pushing down against that lower band, but not, you know, insane. There's a pretty decent volatility. The top of the value area. So pretty much the whole year, the 70% of this past year's volume is below us. So there's still very strong support, and as well as Fibonacci support, right at that 62% retracement level. Of course, you saw the moving averages up above us. So with that being said, you know, I thought, okay, well, you know, I don't want to do a bearish trade. I don't want to do a bullish trade either. So how about we just do both? Let's take a look at the January options, and we'll go out to the 20 deltas, and I ended up selling the 780, 770 put spread, and then over here at the 20 delta, we ended up selling the 1065, 1070, and you had to do two of those because it's a $5 wide spread. So that's what I ended up doing here. There's those two, and then the one. So we have equal risk on the downside, a pretty decent return on the upside. And then my break evens right there are right at these blue lines. So my break even is below that strong support level, which is great, and we got strong support below it. And my upper break even is at the 23%. Remember, we get back above there, and we're back to a bullish impulse move, which I don't see happening for, you know, a lot of stocks for a while. So as long as we stay kind of in this sideways range through January, with as volatile as it's been, we've got a good range to fill in. Then that's kind of the point of this trade. So I'm going to right click. Since we didn't do a Market Outlook Live today, and put it into the Market Outlook category and send that through. All right, and there's our trade for today. All right, you've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread with any questions or comments you have there. Reply to anybody else's thread. Let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video below. Subscribe to our website at marketscholars.com as well. Like us on Twitter and Facebook too. Have a great rest of your Monday night, everybody, and we'll see you all next time.